What's going on with gold, the economy, and currencies? Lynette Zang joins us today to go over these topics and more. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Lynette Zang joins us today. Lynette is well known in the precious metals community, driven by an unwavering passion for educating and empowering individuals to attain financial freedom and independence, utilizing the principles of sound money and, of course, community. And we're delighted to have Lynette join us once again today. It's time to saddle up and silver up for Lynette Zang. Lynette, welcome back to SBTV. How are you doing?
I'm doing great, and I'm so happy to be here, Patrick. Thank you for having me.
I'm glad you're here as well. It's been a while, so I appreciate you coming back on.
Always, anytime.
Thank you. Appreciate that. I can see things are going well with your new venture, so I wish you continued success there. I want to start off with something I saw on your website, lynettezang.com, under education. I saw, I'm going to quote this: everything has a life cycle, and currencies are no different. Can you tell me about that statement?
Absolutely, because it's true. Everything does have a life cycle. But let's start with the life cycle of a human because that's something that everybody recognizes. And so you have an infant. If you put that in terms of currency, this is when the currency has the most purchasing power. So if we're referring to the US dollar, but this would be true with any currency, if we're referring to the US dollar, it had the most purchasing power when the Federal Reserve was first installed. A dollar bought a dollar's worth of goods. Then let's fast forward. My granddaughter just turned 10, right? Well, I'm going to be 71 in October. I am very certain that if you looked at her, you're not going to say, oh, she might be 71 in October. Just like you're looking at me and you're going, she's not going to be 10 or she's not going to be 11. She's older, right? So recognizing these patterns, and if I take it back to the dollar in that circumstance, I would say we had like kind of a young adult in 1971 when Nixon took us off the gold standard, when there was that first run on the dollar in the 60s when other countries lost confidence and the US was reneging on what we agreed to in Bretton Woods in the 40s. So I would say that we're kind of like a young adult, and we had about 28 cents worth of purchasing power. So they had managed on the gold standard by resetting gold a number of times to still reduce that purchasing power. You need to understand that that was the goal from the beginning. Inflation and the cost of inflation is baked into a government backed currency. So here we are with Nixon. We're at a young adult stage, and now we're closer to my stage, right? We're at the end of this cycle because back then, when there was like 20 officially, these are all official numbers, 28 cents left out of that dollar. Now there's only three.
Yeah.
There's only three. And here's another parallel. And that's why I say we are at the end of this experiment because the key tool that the governments use, and this is true all over the world, are interest rates. Interest rates regulate the rate and speed of inflation. So, food, you can say food for the humans regulates their health and their wealth. So, can you see those two parallels, between a human's life cycle and a currency's life cycle? And what happens? Like, I think I'm going to live to be 100. So, what happens when I get to 100? Right? I'm probably going to be if I'm still here, I'm probably going to be pretty close to dying. So the dollar is at 3 cents. It's pretty close to dying, and the world has been, I mean, look at what's happened with interest rates once we hit 2008, which is really when the system went on life support. Well, what happened? They shoved interest rates all the way down to the bottom and held them there for like 15 years. And then all of the money printing that enabled, what happened then was then they were forced, because inflation became visible for the public. So they were forced to raise the rates, breaking a 42-year trend cycle. Well, okay, that would be like if I had a heart attack, then that means that my system is weakening. Well, we've seen that. This has been a problem for US Treasury bonds, which is how money's created. They create the Treasury bonds, that creates the money in the system, and that underpins the entire global system. And now what do we see? People realizing how old and sick the dollar is and turning away from it, turning away from the treasury bonds and creating this huge vicious doom loop, because the world needs the treasuries to support the old system until the new system is in place. Is the new system ready to handle it? I don't know. I think we're going to find out. I don't know. But what I can tell you is if the world stops, which they have pretty much, when the world stops buying US treasuries, that is the death of the dollar. The dollar is on its deathbed right now. But everybody's going to be impacted because the world has been dependent on dollars, and it's still heavily used in trade. And the treasury bonds still underpin the global economy. So there is this massive doom loop. And it isn't just the dollar that is dying, it is all of these government fiat currencies, like all the ones that I have here, and thousands more that do not exist anymore because of their life cycle. Here's a 100 trillion, what is it? $10 trillion Zimbabwe note. I'm a trillionaire in Zimbabwe, but I can't buy eggs with it. So that's what I mean by a life cycle. And if you can recognize it just like you do for humans, recognizing when they're babies, when they're young adults, when they're older adults, and when they're old, right? If you can recognize that in the currencies, then you know the best, you know what the next most likely outcome is, right? And then it enables you to get into a position to thrive and take advantage of where we are in that trend cycle. And at the very end, that's such an opportunity. It's like, I almost can't believe what an opportunity we're facing is. If you're in the right place at the right time with the right asset, though.
In many cases, money, it's I'll just use the word bedrock. It's probably the wrong word. Money, it seems to be like the bedrock of our past, present, and future. And it does have this certainty of the risk of failing. Between the failing where we are today and whatever that new system is going to be, this is where you see the value of gold in between in this transitional period.
100%. Yes, because really, when one currency system dies, another one pops up in its place, right? So the world has to function. So what physical gold, but it's got to be physical. What physical gold and physical silver do is they create that bridge where they hold your purchasing power intact as you're walking from one currency to the next currency. So yes, 100%.
A side question with this, where I'm in Asia, Singapore to be exact, and the government here is it's fiscally sound, it's pragmatic, it's not really in debt, nowhere near a lot of other nations, but it does have to use the US dollar, being that the US dollar is still the reserve currency of the world. The question is, doesn't irresponsible, I'm just going to say irresponsible US dollar also put responsible nations and their currencies at risk?
100%. There is nobody that is going to be immune from this. I mean, it was, you know, Patrick, I've been thinking about this, and I don't know that this thought is as developed as I want it to be, but what I was thinking, all right, what is gold? Gold requires fiscal responsibility. Gold is bedrock. Why? Because it is used in every single sector of the global economy. So it has the broadest base of demand, it has zero counterparty risk, right? It is a solid foundation and it is a commodity physical asset. When we had a convertible dollar, I know I've got one in here. Here it is. Okay. I mean, they're brilliant in how they do this, right? But first, we started out with this 1 ounce of gold, $20 face value. And then we shifted to the gold certificate where you could walk in with this and walk out with this. So they were starting to teach people and train people to think of this as the same thing as this, which it's not. Then they brought in this, right? They brought in the Federal Reserve note. So you had all of these three things circulating at the same level of purchasing power at the same exact time. And for 20 years, right? 1913 to 1933, people got used to these bills and they got used to thinking of them just like this. So that in 33, when these two went away, what was left? This is what was left, the Federal Reserve note. So this is what was supposed to take the place of gold and create restrictions, particularly during Bretton Woods when the whole world pegged their currencies to the US dollar. And the commitment was that we were going to hold it at $35, but we still had this level of restriction. But by the time Nixon took us off the gold standard, I just pulled up for a piece that I just did, a cover of Time in the 70s, late 60s or early 70s. And it shows Nixon rushing in as defender with a shield and a sword and all of these bad and greedy Europeans and these bad and greedy Middle Easterners that were chipping away at the dollar. But the dollar was represented as gold, which, I mean, I've looked at that cover before. This is the first time that I actually realized and saw that what they were still continuing to try to do is have people believe that this was the same as this. Now you come forward, and we don't know exactly what that new system is going to be, but we do know that what they want is a full surveillance system, something that Singapore is quite good at, from what I understand. And look at this representation of Bitcoin. How much does it look like that? So what they're trying, this is all perception management trying to get you to think that this is digital gold. No, it is not. There are so many differences, but they want you to think that it's the same so that you adopt it. I say, and this is really for me where the big opportunity, and Patrick, you and I have known each other for many, many, many years, right? We've known each other for a very long time. And what I've come to understand over this last really year and a half is even though community was part of my mantra, I don't think I really ever focused on it until about a year and a half ago when I went to Australia, threw out all my materials, and started talking about community. And I'm still developing my thoughts on that as we're building this community. But what I've really come to understand is the importance of local community, because what happens as we're going through these transitions? You have weakness in typically, necessities, food, water, energy, security, barterability, wealth preservation, community, arguably the most important now, and shelter. So locally, you have to do what you can to create security in those other areas so that when those grocery store shelves go bare, you can still feed your family. You can still maybe share with some people, other people that you know and you love. It is critical. It is critical because you cannot live without food and you cannot live without water. Now, if we're going even further than that, this is the opportunity to create a quiet and peaceful revolution, to get sound money, convertible, redeemable gold back inside of the system. And that means, what I mean by that is, if you don't like what the central bank or the government is doing, you as the public have the ability to turn in one of these or even one of these and take out one of these, period. Because if you don't have that ability, just like we've seen in Zimbabwe that have been using gold to, well, first make sure that those in the upper echelon could protect their purchasing power when they were doing 1 ounce gold coins. They don't do that anymore. Let's just do the Zimbabwe gold. It's not in physical form at all anywhere, and you cannot redeem the gold. But hey, trust the government, trust the central bankers that are saying it's 40% backed by gold. And they are confiscating gold from the miners by making them deliver it in the local currency that is rapidly devaluing. That's another story. But my point is, this currency that was supposed to be backed by gold in April was devalued overnight 44% last October, and it's dying because it's not gaining adoption. And it's not gaining adoption because once a public loses confidence and trust in the system and in the currency, it's virtually impossible to get it back. Maybe if they had done it sooner, right? Maybe, because this was their 6th iteration of a new currency. And I hate to say this, Patrick, I really do, but that's what I see happening in the entire world. And so coming together, all we have to do, if we can get 3% of the population, just 3%, there's 8.4 billion people in this world, 3% to convert their garbage fiat into sound money, physical gold and physical silver, guess what? I believe, maybe I'm right, maybe I'm wrong, we're going to find out. But if we can do that, I think that we have an opportunity to have a say in the next iteration of currency. And if I'm the one that's sitting at the table, I will sit there and I will demand that it be gold, and I would demand that it be redeemable. And it doesn't even have to be at 100%. It can be at whatever percentage is in there. I'll give up the rest of it. I don't really care. I want the ability to pull this out. Boy,
Yeah,
that was a bit.
no,
Sorry.
it's okay. It's good. Yeah, I know what you're saying. We the word bedrock. It's going to have to. The financial system is going to have to come back to some sort of a bedrock, and that is indeed what gold is, what gold does and can do. Um, I want to slide on over to tariffs. Lynette, can you tell me about your thought process of the tariffs? Tell me the good, if any, the bad, if any, and of course the ugly, if any. And I know there's probably something in all three.
Well, look, people around the world have been going through very high inflation that has proven to be sticky. Well, that's because we're at the end of this currency's life cycle and things just aren't really working the way they used to. But going to the tariffs, I'm just going to go to, well, the bad of it is that it is pushing the world into a hyperinflationary depression. And I say a hyperinflationary depression because there's only one way to fight deflation, and that's with inflation. It's just with this. This is the only tool that they have left. And every time they do that, the value of this stuff goes down. And the true value of this stuff And this stuff goes up in terms of those fiat. So what we're really looking at is we are at war, which is one of the things that happens 100% of the time in currency regime shifts. So we've got obviously Ukraine and Russia, and we've got what's going on in the Middle East, but now we've got a global. I mean, is this the way we're going to play World War III? And there is a complete shift in alliances, right? So I think it's really interesting that after a lot of blowback from the markets in the U.S. on President Trump's proposing to take over the Federal Reserve, right? That's pretty interesting. He has since sort of maybe backed down, and then also turning away from all of our allies and, making it however the U.S. wants it, when I don't really think that we have as much clout to do that. I think that what we're really seeing is a seismic shift in the monetary system because we have to reset this. So my feeling about President Trump and the tariffs, this is not political, this is just economic. We are at the end of the life cycle. There is virtually, admittedly, no purchasing power left. It is just based on the confidence of the public in the currency. But that is fast going away. These tariffs will and are causing spikes in inflation. And that's what the public recognizes. The public doesn't have these conversations. They're too busy trying to pay their bills, keep food on the table. So they notice when the things that they have to buy go up rapidly in price. That kills the rest of the confidence. And there is a trickle down effect. Okay, what's happening with tariffs at Amazon? There was just an article that I read yesterday that UPS is laying off, like, I think, don't hold me to this because I don't have it in front of me, but it's something like 20% of its workforce because of the slowdown in Amazon because of the tariffs. So it's a trickle down effect because how does that impact their ability to pay their bills? And how does that also impact their ability to support, I don't know, other businesses that they might buy things from if they're losing their jobs? So what I really think is, I think this is the final straw. I think that President Trump this time around, I thought he was going to do it the first time, but he didn't. But this time around will bring us into the necessary crisis that is needed to transition from one monetary system into the next monetary system. And this is a global issue, period, end of discussion. So there's something else that's happening, and I think this is good. Not everybody would think this is good, but I think this is good. And that is businesses, small businesses particularly, but hey, Amazon had a little bit of discussion on this. They backed off real quick though, on putting the tariff tax, or tariff inflation tax on as a line item on the bill, which means that the public is finally going to start looking at inflation just a little differently because they're going to see why their milk went up $1 a gallon, or whatever, the blouse went up $20 because of tariffs. And maybe, just maybe, Patrick, they will begin to look at all inflation a little differently and realize that inflation is not a monetary phenomenon. We didn't have inflation on a gold and silver standard. We didn't have it because there were restrictions. We had ebbs and flows in the economy normally, but we did not have that inflation tax because you can't do it on a gold standard. And so and maybe there's a lot of hope in this for me as well, because what I believe is likely to happen if enough businesses do that, break out that tariff tax, people go, well, wait a minute. maybe all of this inflation isn't necessary. That's the end of the confidence. That's it. And when that happens, that's when we will see the hyperinflation, and which, in my opinion, the data is telling me is already here. We just haven't, the public hasn't recognized it yet.
With this, we're talking about the life cycles. Let's say here, right now. Um, I read in a recent Gerald Salente's Trends journal where 64% of Americans are more afraid of running out of money than of dying, according to a survey by Allianz Life. Do you see this as well, Lynette, where people are worried about running out of money, maybe even more than dying?
Yes. And it's interesting that you bring that up. And of course, my good friend Gerald Salente, who does the Trends Journal, and I just love him, love him. Very, very smart man. And actually, when I first became a stockbroker in the 80s, nobody ever talked about you running out of your money, because at that point you were getting like what, 8-10% interest on 10-year treasuries, right? Or 30-year treasuries. So you could put that in, live off the interest. I mean, think about this. If you had $1 million back then, you put that in there, you got 100 grand a year. And back in 71, with the average wage at 10,500, you were a king or queen, as it be, if you were generating 100 grand a year. You could do anything you wanted to do, really. Today, you know, yeah, people are very worried about running out of your money. Oh, okay. You have enough money till you're 82. Well, then what do you do? Right?
Yeah,
Depend on
yeah.
Social Security? I mean, or should we call it social insecurity? So, yes, 100%. I see that as a huge and growing problem. I wouldn't necessarily think that it is just the US, because that really kind of goes into the whole retirement crisis. And wouldn't a big, huge, huge crisis where all the markets were justified to implode and do all of this, wouldn't that just settle the issue that we're having around the retirement plan, with too many people aging and not enough new money coming into the system? So yes, I definitely agree with that 100%.
Yeah. When I read it, the part about people fear running out of money, I think the part that was missing, the way I understood it and the way I see things today, it may not be even running out of money. It's, as we spoke about, just the devaluation of money.
Well, that's it.
Yeah. So back to inflation and all of these things again, where what you thought you were going to have are dependent on uh, that value. It's just not going to be stored the way it should be. The way something like gold, something like silver will actually do it for you.
Exactly. Because just like the average wage was 10,500 in 1971, I believe it's something like 68,000 today. And so most people would go, well, hey, I would much rather have 68,000 than 10,500. But a family of four could be supported with one wage earner in 1971 at that
Yeah.
level. And today
Mhm.
in the US, you need two wage earners, and you are paycheck to paycheck. And what did they stimulate anybody making less than 150,000 a year? So totally to your point, inflation is baked into the system by design. And now we have no purchasing power to inflate away. So that means that we're holding on by a string, with based on the confidence of the public, which is declining more rapidly than I've ever seen, right? Both sentiment and confidence, inflation expectations are soaring. And this was all by design. I mean, go on the Federal Reserve Education Department, put purchasing power of the consumer dollar in the search bar, and look down at the left hand axis. And what do you see? A big fat zero. The Federal Reserve, the central bank, is telling you that the dollar has no value. Why wouldn't you believe them? Right? That's why governments around the world are loading up on gold, because that's the, as to your earlier point, the world reserve currency. And the world is dependent upon it. And can you see how dangerous it is when you have the world? It would kind of be like, a drug addict that is completely addicted to heroin, right? Automatically just turning his back and walking away and saying, oh, yeah, well, hopium will do. No, you're going to have major withdrawals. And depending upon how long you've been addicted, and the world has been addicted a really long time, if you turn away from that drug that you are so dependent on, it could kill you. And it will. This money drug, this dollar drug, it will kill. The system's already dead. It's been on life support since 2008. It's over, guys. It's over. I'm sorry. It's over.
Yeah, Lynette, I think it's interesting how we started off this chat talking about the a life cycle, and we kind of ended up now on life support, where it's, as you say, it's actually dead, but we just haven't, I guess, seen or experienced the things that we need to confirm these things, and I just hope that we can all get on the case with everything and start understanding what precious metals can do for us before we get there.
Boy, I hope so. Because now we are really starting to see the impact here in the US of the tariffs coming through and that trickle down. And with about this much confidence left in the system, let me just say that I am prepared to support 40 people at my bug out location, because I couldn't tell you how much more time we have. Confidence is a funny thing. And it wasn't it Ernest Hemingway, when asked how you went bankrupt, and he said, well, slowly at first and then fast. And I honestly do believe that I'm not going to say that I won't be kind of shocked when we lose all choices, when that next big thing that cannot be overcome rears its ugly head, because I'll be as shocked as anybody else, but I won't be surprised. And I am prepared for it. And I encourage everybody to get prepared as quickly as possible. That takes us back to local community, right? Because you can't live without food, you can't live without water, and whatever your budget is, right? Your skill sets, anything physical, any skills that you possess, those are all barterable. So maybe you don't have the gold and silver, although you should, but maybe you don't. Maybe you have the skills. Maybe, like in my bug out, I have plumbers, I have doctors, I have teachers, I have carpenters, I have farmers. I have videographers. I have my whole team, because I can still work from up there if I need to. So it takes a village. It takes a village. And where I've been working on this hard, I mean, the gold and the silver, yes, I started accumulating that in 2002. I had a little bit before that, but that's when I got real serious about that. I became a prepper in 2008, 2010, when I bought this property and became a farmer. That's not really ever what particularly interested me, but I believe my research, because I know how deep I go into things. And I knew that food becomes the single biggest issue for people. Now, the beauty about silver, when I've done these studies on the cost of food, silver maintains your ability to purchase the same goods and services. So the last time I did it, don't hold me to these numbers, but I'll be pretty close. In a standard basket between 1913 and 1925 had gone up about 2,700%. Silver, spot silver, even the manipulated spot silver, was up a bit more than 3,000%. Spot gold, even the manipulated spot gold, was up over 13,000%. So not only does gold enable you to maintain your ability to purchase the same goods and services over time, it actually expands that ability. That's where the opportunity comes from to get this in the system, but also on a local basis to convert this at the right time, right, into those income producing assets. Because right now, you've got all of those things that the governments have targeted for reflation that are still at nosebleed levels, while you have gold and silver that's been suppressed. And I know that especially gold has been running lately, but it's still nowhere near its true fundamental value. That's going to flip flop. That's going to flip flop. And when that does, if you've got the gold to hold your purchasing power, number one, we'll see who's going to survive this over here, but it's going to be a whole lot cheaper. And then you start to convert this into that. And then guess what you get to do? How about generating income that you can't outlive? What a concept. What a concept. So yeah, people are worried about that. And if you stay in the it's really non-traditional. It's only been traditional for 100 years, the stock markets, the bond markets, etc. The gold markets, thousands of years old. These paper markets, these intangible markets are not that old, but they've convinced people that that's the place to be. And it's not. It is not a safety. That's why we've seen gold spike, because this is the only true flight to safety trade that there is. The only one.
All right. Hey, amen to that. Lynette, before we head out, can you tell us how we can follow you and hear more of your views?
Oh, absolutely. We are very, very active on YouTube and Twitter at the Lynette Zang, and Instagram and Facebook at Lynette Zang. The website is Zang Enterprises, but you'll find it through lynettezang.com. And we also love phone calls. So 833 GLD ZANG, but I'll translate that. 833-453-9264. And as you know, Patrick, I do a live piece every Tuesday, 12 p.m. Arizona time, because Arizona never changes its time. And that's where I like all the questions, and you don't even have to be nice. The only questions I won't take are ones that are bigoted. But other than that, bring it. Let's have this conversation.
One of these days, I will get up at 3 in the morning Singapore time to be able to join that 12 p.m. Arizona time live stream. I just may have to say hello one day. But Lynette, I do appreciate your time and you sharing your thoughts and your outlook on things. I think it's important that even though people may agree or disagree, whatever it is, I think we should still see options that we can have and look for.
Exactly. We have to have, part of the community isn't that you necessarily have to absolutely agree with everything everybody thinks, but you do have to support them. And even those differences. And I will fight to support people's ability to have an informed opinion. That's all mine is. It's an informed, well-educated opinion, because I've been doing this so much and I know how much I dig into it. But, I think I like to have the conversation around all sorts of things, because it's a richer fabric. I love diversity. It's a much richer fabric.
Lynette Zang, again, I want to thank you for your time, and let's not wait so long to do this again. But that's my fault. So again, I hope we can do it again soon.
We can. It's good to see you, Patrick.
That was Lynette Zang sharing her views on the economy and precious metals. To see more of Lynette's views and services, go to www.lynettezang.com. If you like this video, please do subscribe, share, and give it a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.